There are growing concerns about the economic fallout from blockades that are stalling rail traffic in Ontario and BC. I talked to auto parts giant Magna's International CEO Don Walker about whether any of it is having an impact on his business.
I haven't heard of anything, but if you talk about insanity, this is a good case of insanity. We're trying to have a competitive environment here to keep business running, and you have people, I won't get into political, but people stopping trade, affecting all sorts of people, and it's going to have an impact for sure. The more we allow things like this to happen in Canada, the less competitive we are, the less we look like we're competitive with the rest of the world, the less people will come here. It's a very bad situation. People can protest. You shouldn't be, in my opinion, affecting other people's lives and business and the competitive in our country, because that's going to have long-term damage.
There's a feeling that we were already kind of behind the eight ball on how we appear on a competitive basis. Where do you think Canada stacks up these days for investing dollars?
I think I'm relatively comfortable with what's going on. We operate in Ontario, so it's hard, and the automotive industry is almost all here. I see with the new government a lot of good things going on. I think they're trying to reduce regulations, they're trying to reduce red tape, they're trying to reduce costs in a lot of different areas. They are listening. I'm a bit frustrated that it seems like every time something happens, the government's getting criticized. Bill 148, the previous government, was very detrimental to attracting investment. I hear we've created 300,000 jobs roughly in the last 18 months. That never comes out anywhere. So I personally think that the government is doing the right thing by saying if the governments can't be 2 to 3% more efficient per year, companies like Magna have been. We're already a pretty competitive company. Our customers demand it of us. The government can be 2 or 3% more competitive per year. If you look at the $350 billion of debt, how much we spend in interest, $13 billion. We have a $12 billion deficit. Interest rates could easily double. We'd be paying $26 billion of interest. How can we not, as a province, get behind the government and say, yes, we have to be more efficient. We have to. We are selling the next generation down the street. And so I find that very frustrating. But overall, I still think Ontario, with some things I see going on, will be a good competitive place. And now we got USMCA, we have an open border. We should be able to hopefully attract investment and build jobs here.
In fact, you are investing in Ontario, more than $1 billion?
Yeah. Between 2017 and 2020, we just had a meeting with the ministers in CAPSI last night. We're looking at the numbers, but Magna will be about $950 million US, which translates into over $1 billion in our Ontario plants, because they're good plants, they're competitive, and the customers are giving us business. So that's, I think, a good sign that we still believe in Ontario.
When we hear Oshawa closing down for General Motors, obviously there will be tectonic shifts in the industry, and then just smaller changes that car companies will make. They're doing assembly there, and they may be doing some parts. I mean, what in terms of your customer base, how much does their health affect your own outlook?
Well, certainly if you can attract assembly plants, and that's the number one priority of CAPSI in Canada. CAPSI is the Canadian Automotive Partnership Council. Then if you have an assembly plant, you tend to have more suppliers around the plant. But whether the plants are in Michigan or Ontario, our plants in Michigan or Ontario can be competitive. We can get across the border. So I hope with the new NAFTA that maybe we can get more mandates from the car companies to keep the plants full, or maybe attract new ones. But as long as the plants aren't leaving this geographic area, then we should be able to compete effectively and win business.
On your 2020 outlook, declining sales, when we strip out currency effect of US dollar and the sale of a business, what's your organic outlook?
We just gave our outlook, so we talked about what we're doing in 20 and 2022. So our sales are going from roughly $39 billion, if you take the middle of our range, in 20 to about $42 billion in 2022. So we are growing, and it's growing faster than the market. So, and our margins are also, we've also shown in the outlook, our margins will be going up by a point as well. So we think we've got a pretty healthy business. That's while we are spending a huge amount of money and expensing it in development of our technologies for electric vehicles, the drivetrain, and also assisted driving levels. We call it level 1, 2, 3. So not fully autonomous, we think that's further out. but we're spending a lot of money on new technology. So overall, the market is relatively flat in North America, relatively flat in Europe, down a bit in China, but we are still growing.
And on those new technologies, the investment in lift, it appears as though you are saying, yes, this is still the future, but the future is not quite as close as we thought.
Yeah, we had a partnership with Lyft and we were investing, and it actually worked out well for both of us. The part of their business model depends on them having fully autonomous vehicles at some point in time. And it's going to come at some point in time. Our view is the technology for fully autonomous vehicles in cameras, radar, LiDAR is actually different than what our customers are seeing for, say, highway driving. So we're focused more of our R&D money going forward on level 1, 2, 3. That's where the big market's going to be. Maybe in 10 years from now there will be a reasonable market, but I don't think it's going to be that many fully autonomous vehicles other than ride-sharing companies, because I think they'll be too expensive and most people won't be buying a fully autonomous vehicle.
This shift to electric has also been slower than many had hoped. We definitely see a strong market reaction to changing subsidy landscape by government. How far off is that? What does it require to make that a real market for the industry?
I think the time has come where electric vehicles are going to start penetrating. I said publicly 6 years ago it was going to be pretty slow. A lot of people thought we were wrong, but we're looking at ground up data. I think it's going to grow. Hard to tell how fast it's going to grow. It depends on electricity costs, battery costs, fuel costs, regulations, megacity rules. So a lot of levers, but I do think it's going to start penetrating. But there's other solutions as well, maybe hydrogen long-term, fuel cells, the internal combustion engines getting more competitive as well. We have to look at how fast is the charging infrastructure going. So it is going to start penetrating, but there's still a combination of technologies. So we're investing in, quite frankly, electric systems, hybrid systems, and every customer is looking at it slightly different.
You've got a global footprint. Obviously, North America is massively important to you, but what is the outlook for growth, either through M&A or just new invested dollars in Asia or Europe?
Well, we're in the fortunate position that we're generating a lot of free cash flow. So we do have the ability, we're still spending $1.7 billion US in capital per year, and beyond that we still have a lot of free cash flow to either make acquisitions or we can do buybacks or continue our dividend policy. So I personally think that the auto industry is the highest tech industry in the world. It's a massive industry. There's a lot of shifts going on in mobility and how people are going to move around. So I think the sky's the limit. The parts business is plus or minus $1 trillion. We're 40 billion, including our full complete vehicle business. So our parts is about 35 billion. We're the third largest in the world with 3.5% market share and a lot of new technology. So for the successful companies that have new technology, bring it to market to solve problems for our customers, I think it's a really exciting time to be in the market, and I'm really confident about our future.
And does that mean you might be in the market for acquisitions of any size?
We're always looking at opportunities, and I think with the slowdown in the market, might be more realistic opportunities to get good acquisitions that will also be accretive. So we're always looking. We've made some big acquisitions in the past. I'd never make an acquisition for the sake of growth, but if it's the right technology, if it's the right returns, and our customers would support it, then we're always looking.